Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to build on some things we've been talking about over the last week or so, and I then want to mostly bring things back down to reality, because as much as the hype and excitement is good, we are actually producing de facto leverage in the system, and this is ultimately what leads to big volatile bear markets for Bitcoin. So I want to talk about that and a couple of other things pertaining to keeping a level head here. Then I've got a couple of nice charts to show you, and then we're just going to continue to put the focus on finding some cycle lows. We're even going to do Ethereum today because a bunch of the members were asking me to cover that. So without further ado, let's get into this. I first wanted to point at this because we had a big ADP Jobs miss. Private sector hiring rose by just 37,000 in May, the lowest in more than 2 years. So we continue to see labour market deterioration in real time. This continues to feed into my idea that the Fed's current funds rate is overly restrictive and that the Fed is behind the curve. So I'll say no more about this. We'll save this for the weekend's deep dive. As I said, I want to build on what we've been talking about for the last week, which is that we're seeing more and more companies, and even now a gold mining company, starting to add Bitcoin to its corporate treasury. And so this acts as a double-edged sword, because on the one hand, we can say, well, more and more companies are showing up, more and more companies want to add Bitcoin to the treasury and hold it for the long term, which is more and more adoption, more and more demand, and because it has a limited supply, that should be conducive to higher prices. And it's not just corporate treasuries and that type of thing that people are getting excited about, it's also things like this, because the 3.6 trillion asset manager JP Morgan is now going to accept Bitcoin and crypto ETFs, starting with the BlackRock iShares Bitcoin Trust, as collateral for loans. So people are going to be able to borrow against Bitcoin, crypto, and IBIT, the iShares ETF. All of this type of thing actually acts as de facto leverage in the system, and I just wanted to spend a moment here talking about how that works. Because if these companies that are adding Bitcoin to their corporate treasury can't survive up to an 80% drawdown for Bitcoin, then we could easily see large-scale de facto leverage unwinds. So what would this look like? If any company buys $5 billion worth of Bitcoin, and then we do get an 80% bear market, and I know there's some argument and some case to be made that the bear markets are diminishing over time, but never say never, right? It's a market, anything is on the table all the time. And in this example, let's say we did see an 80% bear market. Well, the 5 billion on the treasury would actually end up being closer to 1 billion. Now, if the company, whichever company it is more than happy to diamond hand their Bitcoin, to hold through an 80% bear market and maybe even buy some more down at the lows, then it's not really a problem. But if a company is either unable financially to sit through an 80% drawdown and therefore becomes a forced seller of their Bitcoin, or just decides simply, actually, I don't want to sit through an 80% bear market, I'm going to lighten up a bit, then of course the only way they can do that in either scenario is they have to sell some of their Bitcoin, if not all of it. Now, as they sell the Bitcoin, this is where it becomes a de facto leverage unwind. Let's say they sell some of their Bitcoin. Okay, first of all, in the case of GME, there are many people like me, for example, who the only reason I hold this stock is because I thought they were going to eventually add Bitcoin. They did. And therefore, my entire investment thesis is that it is going to repeat a big parabolic blow off top, just like we saw in MicroStrategy, Metaplanet, and many others. So if suddenly they decide they need to unwind their Bitcoin, whether it's for financial reasons or by personal choice, investors like me will say, whoa, 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 I don't want to hold GME anymore, and I'm going to dump my GME stock. At the same time, there would be many people out there that see companies, whether it's GME or MicroStrategy or whoever it is, they will see companies shedding their Bitcoin and they will say, this is bad, okay? Those companies have done a 180, they no longer want to hold Bitcoin, they must see something bad, and it will cause a bunch of people to unwind their Bitcoin positions. And of course, as this happens, whether it is the share price of GME that is tanking or whether it is the Bitcoin price itself that's tanking, we then create this snowballing effect that is akin to a massive deleveraging, a gross deleveraging. Because as the Bitcoin price moves lower, it will put more pressure on these companies that said they were going to diamond hand and hodl their Bitcoin forever to start to protect their assets and their losses. Then if they start to think, okay, better step in here and do some damage control, sell some Bitcoin, of course, we continue to feed into this snowball and this cascade of, we see companies sell investors get shaky and nervous and they sell their Bitcoin, price moves lower, the whole thing compounds over and over again, and not just with Bitcoin, but with the share price of these companies as well. And so remember, with leverage, it works both directions. On the way up, it enables people to capture excessive upside, but on the way down, it also worsens the downside. And the more we're seeing things like this, with people borrowing against their IBIT shares or their ETFs or whatever it is, of course, this creates more de facto leverage in the system. Remember, if you borrowed against your Bitcoin and your Bitcoin declined 50, 60, 70, 80% in the worst case scenario, you could start to get margin called on your loans. Guess what? You have no choice. You have to sell the Bitcoin. We have to continue to feed into this doom loop of gross deleveraging. And of course, as that occurs, we get even more selling pressure. And then companies like this potentially say, whoa, 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 what did we do here? Let's dump our Bitcoin. And hopefully now you can see that things can get pretty bad pretty quick. There's a reason I say risk happens fast. And in case you're thinking this is new or whatever, no, it's not. This happens every single bear market. And it happens not just in Bitcoin, it happens in traditional finance as well. So I just wanted to kind of bring this in as an alternative viewpoint, because whilst it is fun to sit here and say, yeah, we could well be having targets as high as 300k Bitcoin by the end of the year, particularly if we see more and more of this type of inflow and demand coming into the space, then those targets are not super unrealistic, although I know many people don't think they are realistic. But at the same time, remember, what goes up, particularly what goes up in near vertical fashion, always comes down thereafter, and it is on the downside that we may well see deleveraging. It's also one of the reasons that I think MicroStrategy poses a big risk to the markets. I know it's not a fun conversation to have because there are many people out there all in MicroStrategy irresponsibly long. They've been promised generational wealth and they may well get it. I am currently long MicroStrategy myself from both the longer term accounts and from the shorter term accounts, as the level 3 members know. But that does not mean that at some point something couldn't go wrong, forcing MicroStrategy to sell Bitcoin. And it's a big if, it's a speculation, there's no evidence they're going to do anything of the sort at this moment in time. But if for some reason they get forced to start to unwind their Bitcoin, you could probably see, based on everything I've said so far, how quickly that could have a snowballing and compounding effect and would be akin to a massive deleveraging. Particularly in the case of MicroStrategy, because number one, they hold so much Bitcoin, and number two, because Saylor has made it his entire personality to stand on the stages every opportunity he gets to tell you, you never sell your Bitcoin, you diamond hand this thing forever, and if you sell it, you're an idiot, if you try to trade it, you're negative IQ, whatever it is. Okay, he has made it his entire character to stand there and say you never sell Bitcoin. So imagine the detrimental impact this could potentially have if for some reason he is forced to sell some of his Bitcoin. So in summary, short term, okay, the leverage is working for us. The leverage is working to help push us to higher and higher prices. But if we do eventually find a top and we roll over into a bear market and we start to see this kind of unwinding, it will just be business as usual. So I just wanted to make a little point about this morning, fitting in with this theme of keeping things grounded in reality. I saw this and all sorts of variants of this doing the rounds this morning, that DT and Warren agree that they need to scrap the debt ceiling to fund 4 trillion in extra spending. Now, of course, Bitcoiners are extremely good at sniffing out incoming liquidity, and so naturally they were all jumping up and down this morning all over Twitter, saying things like the printer is coming, Bitcoin's going way higher, blah, blah, blah. And that may well be true. But just keep in mind, monetary policy is in a weird place at the moment. And so it's very easy to point at this and say printer is coming. But remember, true QE with Fed balance sheet expansion doesn't even work unless rates are at or near zero. Keep in mind, based on all the analysis that we do in the weekend's deep dive, we are still in a disinflationary trend. Investors are extremely good at looking at these counter-trend wobbles within the context of a macro downtrend and saying, ha, told you so, Camel, 1970s repeat, or ha, told you so, Camel, global M2's pushing up and therefore inflation's pushing up. But in reality, okay, all we have seen at the moment is yet another lower high below these highs and all of these. If I grab my pen and draw a trend line, we're not even close to a touch of resistance here. And I would speculate we're not even going to get through this one right here. I think this is going to continue to move to the downside. So whilst we did get some short-term relief right here, remember, the more vertical the trend line, the more likely it is to break. But as I often say, markets don't move in straight lines, okay? And this is still very much a disinflationary trend, particularly if this thing continues to move to the downside in the future. And I still maintain the real risk here is deflation. And if you think about it from a monetary policy perspective, that makes the most sense. Okay, even if we're going higher first for risk, for Bitcoin, for gold, which I think we are, At some point, the bubble has to pop. We have to enter the bear market. Then when we're in the bear market, we might finally see the Fed start to realize how behind the curve it is. Okay, here we go. Still remaining paused into June. Okay, this is 100% overly restrictive given the inflation and labor market deterioration. But there's no quicker way to force the Fed's hands than to have a true bubble pop in risk, which will force people into bonds for safety. That will force the yields down, and then the Fed will have to start panic cutting to try to catch up with how far behind the curve is. Only once rates are back towards zero or even at zero can we talk about QE and printing being effective. By the time all of that occurs, it's most probably that we're going to be into the mid to latter part of 2026, and that's where we can start hunting down those 4-year cycle lows. So again, yes, it's exciting, printer is coming, although to be honest, I don't think that's exciting, because I think the wealth divide this printing creates is going to be very, very tough for most people. But I guess if all you care about is your Bitcoin stack pumping, then yes, okay, printing is conducive to higher Bitcoin prices. But just keep in mind how monetary policy doesn't even really align until after we've seen that 4-year cycle low. And there is almost certainly going to be a nasty bear market between now and that 4-year cycle low late 2026. On a slightly more bullish note, a new Bitcoin super signal has appeared, which happens when volume reaches extremely low levels inside of bull markets. And we currently have the lowest volume reading since 2014. The other super signal this cycle gave us led to a 200% run from October 23 to March of 24. Before that, the only two other super signals we've ever recorded were October 2016 and December 2012, which spawned the entire bull markets thereafter. And we just so happen to have one of these volume super signals right here, right now, right as we're expecting the banana zone to start to unfold. So short term, extremely bullish. But please do keep an open mind to how the monetary policy works and the types of things we have to see first before the Fed can truly start to step in and be effective with QE. Something else that is super bullish here is after briefly leaning towards distribution, the largest Bitcoin holders are now back in accumulation, all wallet cohorts showing varying degrees of buying, with the strongest activity in the 10 to 100 Bitcoin and the less than 1 Bitcoin groups, both reaching a maximum score of 1, showing that they are in hard and heavy accumulation mode. Even the top cohorts, which is 1,000 plus Bitcoin and 10,000 plus Bitcoin, are also still very much in accumulation mode. So as promised, for those few members that were asking for it, here is Ethereum, the cycles update. We already had this cycle in here, so it's hunting another cycle, and then it should be time to go. And it's really as simple as that. We're in the window now to see a swing. Very much the same deal for Bitcoin. Okay, this is day, let's measure this out, 59 as of today. Okay, so day 60 would be perfect. Day 60 would be tomorrow, which of course would be the 6th of June, which is what I've been putting in my thumbnails over and over again, because that's the middle of the window. So it seems only reasonable here to either have a double bottom or one final undercut, and then we can go higher. If what we do is just blast off from here and break out to confirm, then what we can say is that was a day 54, get long on the breakout, and it's business as usual, right? Cycles doing cycle things. I know a lot of people were confused about the inversion here, but remember, there's plenty of tutorials you can go and watch. There's a PDF, which I'll tag down here right now, and there's a whole camelfinance.co.uk website where you can get an indicator that will do this for you, and there's tons and tons and tons of free educational material there. So there's no excuses, okay? If you want to learn how to trade cycles, if you want to be able to predict the dates when we're going to find lows, just like I've been showing you, is entirely possible. Go and learn the rules, implement it in your trading strategy, and everything is going to be all right. Now, for gold, look at this, okay? Let's go. I'm so happy about this, and we seem to be well on our way to doing something like this for the precious metals, so happy to see that. These miners, I suspect, are going to be gapping to new highs this morning, so that's great. The SILJ position we're still rocking with right here. And again, queuing another one up because we know there's a cycle low window coming in about a week and a half. So happy days there. For the stock market, it seems like we are long and strong for now at least. So I'll update if anything happens. Of course, if you're a level 3 member, then you know there's a plan just in case this thing should confirm a lower high and roll over. It's been a while since I've covered the VIX. For a long time, the channel OGs will know, I was saying as we approach the final high for the stock market, there's a good chance we'll get down sub 12. And then from there, I think it's a mandatory long because new all-time highs should be coming thereafter. And you can see there was a few times when we were heading down sub 12, but we never quite got there. But I do wonder if this is the next path here, if we're going to finally start to attack that 12 level, because I think a long from somewhere down here with a few points to stop, targeting 3-figure VIX represents a very nice opportunity. And we continue to look at the likes of MicroStrategy. We added more crypto-related equities in the level 3 members section yesterday, so we're continuing to build exposure there. We're continuing to extract further beta from the market, and many of these are showing that they want to move higher. Many of them are even leading at the moment. So we're going to continue to do that. Once we've had a little bit more confirmation of upside, I think we can draw a line under these cycle lows and use that for hard invalidation. Any positions we've got, we'll move the stops up from where they are to below the current cycle lows. And then we'll be guaranteed to be walking away with some profit, even in the worst case scenario. So happy days, right? What else is there to say? And as a little nod to the handful of the Camel Crew OGs, we are a few days away now from finding a cycle low, as you can see, something like a couple of weeks. And it may well, if we get a push from here, confirm this is an early cycle low. So I've long been saying this should be the low for XRP that leads to new highs if it's going to happen. Otherwise, this whole thing looks quite distributive. So we don't want to see any more distribution. And I think we'll leave it at that. So I'm your boy Camel. I hope you're doing well in life. And until tomorrow, have a great rest of the day. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game.